Good morning. Welcome to Stock Market Today. It's Tuesday, March 9th, 2021, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. They hit your inbox every trading day before the market opens. So U.S. equities finished mixed on Monday with SPYs and Qs reversing Friday's strength, while the diamonds DIA closed higher on the day. The growth to value rotation remains the biggest theme at the factor level and can be seen in sector performance on the day. Utilities, materials, financials, and industrials leading, tech and comm services underperforming. Treasuries were mostly weaker. The dollar was stronger on the yen and euro crosses. Gold finished down 1.2%. WTI crude closed lower by 1.6% on the day. Now, as we get to the desk this morning, S&P futures are up 1% after Asian markets finished mixed overnight, with China lagging while Japan and Hong Kong outperformed. European markets are higher. Treasuries are stronger across the curve, with the yield on the 10-year note down to 1.54%. The dollar is weaker on the major crosses, and that's a key. Remember, we looked at the dollar yesterday. Gold is up 1.3%. WTI crude is up 1.1% to kick us off on Tuesday morning. That starts out with a reversing of the reversal. So remember, Friday, we pushed lower, held key support, and then rallied. If you were looking at candlestick charts, there were a lot of hammers to be seen on Friday. You could say the word of the day Friday was hammer. Yesterday, we reversed that. So if you after the hammer, you want to see follow through, continuation to the upside, and we did not get it yesterday. So we reversed the reversal with SPY holding support in the 370 to 380 range. You can see the close there at 381.72. Below that, 340 becomes important. But let's focus on near-term support levels for the time being. Qs, we are now at that 300 support level. It is key. We're there. We actually closed at 299.94. So 6 cents. We'll give the benefit of the doubt to the trend for now. But we are dancing with that level. Now, futures are higher this morning. Last I looked, QQQ was up over 2%, trading around 306. So thus far, doing its job, holding that level. And reversing from here, right? You go back to yesterday's show, everything we said we wanted to see. Qs reverse from 300. IWF, the 7 to 10 year Treasury bond ETF, holding support at around 114. The dollar fading from resistance near the UUP on at 25. Dixie is about 92. So watch those levels. They're key here. They are the driver of the roadmap at this point. So far, the benefit of the doubt remains with the trend. The trend is now wavering, but not yet broken. IWM support 200 to 210, then into 160 to 170 range below that. So above 340, SPY still has upside potential to 413, but we'd be remiss if we said we weren't in a choppier type environment with trends now wavering, especially for the Qs. So today could be an important day. I hate to attach outsized importance to any one day. The level is key, right? We're going to see how we react around that level. In an ideal world, yesterday was the test of 300. The past couple of days, maybe Thursday and even last Friday, got down to that level, danced, and now we rebound. That's the ideal situation, along with those other factors that I discussed as it relates to treasuries and the dollar playing out as well. So we're going to continue to watch. Now, my base case is that we hold, that we're going to defer to the trend for now. We're actually going to look at an interesting screen a little bit later on here in the show. But that's the framework that we're working with as we head into Tuesday morning. Let's hit our market in a minute. What am I writing about in my note today? Well, it is Tuesday, so we're doing our sector rotation work. And it was a mixed session as rotation continues to favor the value trade. And as I said, you can see that at the sector level, right? Financials and energy remain bullish standouts, while tech, discretionary, are under some pressure. Now, what's interesting is ARKK has probed a key retracement level, and we'll look at that a little bit later on in the show. And I mean, that's the one that's on everybody's radar screen. We know it. Everybody is infatuated with ARK, what they're doing, how they're going to handle this drawdown in their funds after a stellar year last year. So let's take a look at the key retracement level and discuss. Qs, as I said, test important $300 price point. If they're going to bounce, this is the level from which to do it. And thus far, we are seeing futures point to a higher open here today. Now, getting back to that mixed bag yesterday, the Dow was up 96 basis points. That's your rotation trade, right? Along with small caps up nearly 0.5%, down 9 to 5 bulls to bears. S&P down 0.5%, 137 to 48 bulls to bears there. NASDAQ ratio flipped. Remember, we discussed that yesterday, 23 to 13 bears to bulls after losing 2.8% on the day. Small cap pop 759 to 268. So this is your rotation trade. Bonds down, tick, sending yields higher. That's been the pain point for the market here in the near term, especially those high multiple growth names. Utilities, your outperformer on the day, so certainly a defensive feel to the mixtape, up 1.4%, but 1 to 5 bulls to bears there. And if you read my note, utilities still very much in a relative downtrend. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes across the board are mixed. So here, the screen of the day that I wanted to kind of run through today. Remember, Tuesdays we run a bullish screen. Thursdays we run a bearish screen. And the screen of the day today is when markets get choppy with a downside bias, as we have here over the past few weeks. I always think it's kind of important to find your leaders, the best relative strength, right? So what I'm looking for here are stocks that are very bullish in the Russell 3000. Okay, starting with a very bullish stocks, and technicals are bullish, right? So we want some good relative strength there. Price level, we're above the rising long-term trend line. So in an uptrend, we want names that are oversold within the context of that uptrend with strong money flow and strong relative strength. So these are names that have held up while the market has become choppy. And what we can see here is that 34 names have made the list. Names like Archer Daniels, Midland, ADM, CAI, right? A couple interesting REIT name on there, CBRE, Foot Locker, Micron, right? The semi space has been under a little bit of pressure, but Micron is on that list, holding up. Silicon Valley Bank has been one of our favorite financials. So you can see kind of an interesting name here, an interesting group playing out. And so if I'm looking for ideas within the context of a choppy tape, I want to skirt to the relative strength. I want to find the names that have held up the best within the market, and while the market's been choppy. And those are the names that could potentially be leadership on the way out or as we stabilize. So I want to focus on those names as I'm building a list. So that's the context for today. Take a look at this name, screenshot it. If you want to make it your own as part of your process, I think this is an interesting starting point. So let's take a look there. Some financials, right? Jefferies and Raymond James in there, right? So an interesting mix. MLM is a materials company. So take a look at this screen going forward. Let's look at our sector tracker now, moving to the last 5 days of trading. Energy and fins remain at the top of the list. They are your bullish standouts on a relative basis. Staples popping up a little bit as well. We don't love seeing that. Industrials, utilities, and materials round out the group that's higher over the past 5 days. REITs down about 1%. Healthcare, comms, discretionary, and tech, right? So that's your rotation trade. You can see your rotation trade playing out, number one, from a bigger picture trend perspective, and then you can still see it playing out in the near term on these 5-day look back periods. So an interesting dynamic at play. Our industry in focus, healthcare services. Past 6 months, healthcare's kind of been a ho-hum group, not really jumping out to me. But services is interesting. They've outperformed the S&P by nearly 20% over the past 6 months. The strong power bar ratio at 15 to 7 bulls to bears, and it's currently ranked number 13 of 21 subsectors. Some indicative names there: Anthem, ANTM, Select Medical, SEM, and Universal Health, UHS, all with very bullish ratings, all holdings of a fund that has checked back to the rising trend line. So what I see here is we got extended. We were overbought at the upper volatility band, and now we've pulled back. Now we're oversold in an uptrend at the lower band. We have a bullish rating, a bullish ratio. Trend is strong as we are above the rising long-term trend line. Chaikin money flow, a little bit weaker here in the near term as markets have pulled back. So something to be mindful of. Still an outperformer, though. The outperformance is middling, right? It's still a leader, but middling here over the past couple of weeks. So it's an interesting group. I think it's a group where if you're going to go looking for ideas, you need to be selective. So let's just kind of keep that in mind as we're going through our work here today. Let's take a look at yesterday's S&P movers and shakers, gainers and losers. Didn't see a ton of company specific news. Now, Viacom gets a big day yesterday, up over 12.5%. Remember, Viacom owns CBS, which aired that interview of Harry and Meghan with Oprah that garnered 17.1 million viewers. And that is what I'm seeing as the driver of Viacom yesterday. HBI, nothing company specific. United Airlines, UAL up 7%. Nothing company specific on them, but UBS is out with their fare tracker data. So maybe there was an interesting data point in there that juiced UAL by 7%. VNO, a REIT up 6.8%. ROST, Ross Stores up 6.5%. Didn't see anything company specific to drive trading in that name. On the loser side of the board, semis have been under pressure here of late. Teradyne, Lam, and Clack, nothing company specific, but you can see that they are 3 of the 5 names. Lower Enphase, part of the solar group, that clean tech trade, which was so powerful towards the back end of last year, has back half of last year, really. Has started to come in a bit. Enphase is very bearish, down 8%. Align, didn't see anything company specific there. Interesting about Enphase is they actually caught an upgrade yesterday at Raymond James, but the kind of the thematic trend of moving lower in those names overpowered the upgrade for now. Let's take a look at the charts, right? Financials and energy relative. Top panel is financials, XLF relative to SPY, and you can just see that the theme, the rotation has played out. Remember how this kind of started in the summer, early summer last year. It was materials, then it moved to the industrials, and now you can see the last two to get into gear. First, it was the financials, and you can see they're ahead, right? They've made the turn and broken out. And then energy has been strong since November, December, and on the verge of taking out that June interim high, right? So these are near-term shifts, and by near-term, I mean kind of within the past 6 months, shifts in the relative trends for these groups. Right. All part of the same theme, all part of that cyclical rotation trade, reopening, reflation, a lot of the key drivers, right? Financials get the added benefit of a steepening yield curve and higher rates. So you're seeing it. It's playing out. We go into a lot more detail across the sector landscape in my note today. But fins and energy, I guess the only thing maybe we could say here is that the cyclical trade is a little bit stretched in the near term. But I made that same argument last week too, right? So these things can overshoot on you, but that's the way I see it. So I'm going to tell you what I see and what I think. I think these trends are still very much intact, but going parabolic here in the near term. Could we make the case for a little bit of a pause? Of course we can, but still an interesting part of the rotation theme, and you can see it more broadly. I love the RRGs, the relative rotation graph. And what I'm looking here is just 4 weeks, trailing 4 weeks relative strength. And you can see, right, in the leading quadrant, who do you have? Energy and financials. Also have comms in there holding up. And in the meantime, tech is weakened. Discretionary has moved into a lagging position. Materials and industrials are trying to bounce. Now, interestingly, REITs have moved into an improving group, and healthcare is kind of stagnated here. Utilities and staples are your defensive areas, but they're kind of moving towards an improving, well, the utilities are anyway, moving towards an improving stance. So you're watching this rotation play out. It's fascinating. I would urge everybody to get a big picture view of what rotation looks like, utilizing something like a relative rotation graph. It's a big part of my process. Just got to quick sense of who's leading, who's lagging, and the path that they've taken to get there. And then finally, let's end it with ARKK. It's on everyone's list. Big run from the March lows to the February highs, and now the pullback has taken us to the 38.2% retracement level of that entire move. So like the Qs at 300, if ARKK, the innovation ETF, is going to bounce, this is a spot from which to do it. Down below, you have price-based support starts to come into play at around 106. That'll wrap us up. Take us for that test drive. I'll be back with you tomorrow.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.